continue the conversation, get some insights in the news shaping the markets. For that, we welcome in William Lee, Chief Economist at the Milken Institute. It's great to see you, Bill. I'm glad you are here. We got through inflation prints, we got sentiment tomorrow, and next week will be the Fed. So what's on your mind right now? Top of the business agenda.
Isn't it great that we're going to be getting the interest rate cut next week? The only concern that people have is it 25 or 50 basis points? And if it would have been 50, or rather, it would have been 25. But people were hoping and hoping for that 50, so that we can get on with getting the rates down to where they would normally be. Unfortunately, inflation proved to be a little bit more stubborn, and it's still holding in there. And I think that's why the Fed is going to take it easy and start with 25 basis points. But really, there really is a Goldilocks sense of the economy right now. For me, the only sadness about the economy is the tilt that it's having toward having more and more people having to get an additional job in order to make ends meet. The fact that savings is distributed more and more toward those who are rich and able to cash in on some of the great capital gains they've experienced in the stock market, but very few people can do that. The top 10% of the population own about 70% of the stocks and pension funds out there, and so more and more people are running out of money to tide them over.
Yeah. When I think about the economy, and labor became front and center issue for the Fed more so recently, right? Inflation was really, we talk about the mandates, right? Inflation was really front and center, but really I felt like their attention turned to labor. And your point about people having to work multiple jobs, how will this change? Is it an administration change? What needs to change for us to feel like our dollar goes a longer way, or what we're making with our wages? What needs to change, do you think?
What really needs to change is that people have to be able to have jobs that are more productive. Their salaries have to be higher. And the only way we're going to get that is through higher productivity. And I think the election is really focusing on where the economy is going to be reshaped. It sounds like what Vice President Harris is proposing is to reshape the economy through giving more social safety net, expanding the level of benefits so that people feel that their families are protected, they get child care, the health care is taken care of. The Republicans are favoring more of the biasing investment toward productivity, enhancing investments. And I think the stock market has sniffed some of that out, because a lot of our investment in AI right now is exactly toward that, allowing AI and productivity to be labor enhancing and not labor replacing, to allow a high school graduate to be as productive as an MBA. And to do that, we need to design our new technology and software in a way that hires more people and doesn't replace more people.
So that being said, for next week, most people are anticipating 25 basis points, right?
Yeah.
It looks like it's getting close for the 50, though. What would you suggest to the Fed? How should they do this? Start gradually, add bigger, or start with a 50 and then see? What would you really say to them?
My own preference is to start with 50, and because we have a long way to go. At 5%, we have quite a lot of room to go down to the 3.5% level that they think is going to be consistent with the long run level of interest rates. With inflation at 2%, if we can hold at 2% or near 2%, the real rate it would be a little bit on the border of a percentage point. So that would make it 3.5 percentage points would be the long run rate. At 5, we have a long way to go. So why not get on with it?
Yeah, understood. Let's get back to the consumer, because you did say that you'd like to see jobs that have more productivity, higher wage growth. You also have an influx of migrants. I mean, how is that fitting into the economy? Is it helping? Is it hurting for Americans that, need to support families and such?
What we're seeing is, in some ways, the data are being messed up by a lot of trends that are post-COVID that we haven't seen before. You're absolutely right that the immigration story has really added to the labor force to the point where the unemployment rate rises without a lot of layoffs. In fact, there are hardly any layoffs. And that's why I've been so convinced on this program so many times that we're not in a recession. You don't get a recession unless you get layoffs. And the unemployment rate has gone up. Why? Because more and more people are looking for a job because they know it's a good time to look for a job. and jobs are plentiful. Now, going forward, these jobs, unfortunately, are in like labor, hospitality, areas and sectors where wages just aren't very high. And that's where the productivity story really has to kick in. Investors, I think, by investing in technology and AI, not only does it improve profits over time, but it improves real wages and people get paid more. Any fiscal policy that encourages that is going to be a very good fiscal policy for the U.S. in the long run. Unfortunately, we don't have enough of these deregulatory and incentive producing kind of fiscal policies to try to get more of that good stuff going.
There is an argument about jobs, right? We're saying slower job growth, which it is, but it's still in perspective, still pretty good employment overall, right? So I never know whether or not to say what a crummy job market it is or what a fantastic job market it is. I mean, I think that almost becomes partisan. That being said, it is slower growth than it has been. And with that, people feel like they need to cut back on spending. And when you cut back on consumption and discretionary spending, there goes GDP. How worried or what levels do you think we'll see for GDP by the end of this year into 2025? And are they good levels, in your opinion?
That's a great point. In fact, everyone says things are slowing, but by how much? If you look at the trends and the latest data, the GDP now estimate is that GDP for third quarter has estimates have dropped from 2.9 now to 2.5. So really, it's still extraordinarily strong. 2.5, by the way, is well above the natural rate of growth of the economy, which is 1.8. And again, a bit of history. During the Trump administration from 2016 to 2019, the economy added 185,000 jobs per month on average during those 4 years. During the Biden administration, because of COVID, those jobs that were added dropped down to something on the order of 135,000 per month. So 130, 150, 180, those are normal cruising speeds for the U.S. labor market. 200,000 is way above normal and way too hot and certainly can't be sustained.
Right, 200,000 is too hot. I mean, a lot of the jobs are just jobs that came back after COVID, right? I mean, they weren't like
Exactly.
newly created jobs. I mean, let's call it what it is. But I always enjoy our conversations very much, Billy. Thank you for coming on today. William
Thanks for having
Lee,
me.
Milken Institute, thank you for being here.